OPEC has been steadily unwinding its production cuts this year. It's trying to maintain and even recover global market share. On the weekend, the group said it will boost production by more than 500,000 barrels a day in August. It's the fourth monthly consecutive increase. Let's get more from Andrew Botterill, Energy, Resources and Industrial Partner at Deloitte Canada. Andrew, great to see you. So OPEC Plus, they have had enough, it seems, of seeing others grow production while they restrain it, and they've consistently been increasing production.
That's absolutely the case, Andrew. Good to see you again. You're right. OPEC is, they've signaled this to the market for quite some time now. We're seeing consecutive months of doing this. And I think post-COVID, as we saw a lot of economies kind of wake up and a lot of demand increases, and we saw all-time highs for production from the U.S., Canada as well included. So as they've seen countries invest in their energy, OPEC is trying to get their share back.
You do see the prospect of a global oil surplus this year?
You know, there certainly is some headwinds, I would say, especially when it comes to some of those supply and demand balances. I think what's important to note, though, is we do have very robust demand around the globe, and that's the reason why we're still talking about, high $60 oil right now, is because demand is quite strong, giving opportunity for OPEC to increase those volumes. And no, it's not going to have a real dramatic effect on prices, but it certainly is going to put some headwinds and some concern to the back half of the year to say, are we going to be able to continue this balance, or will we see some downside risk in our oil price?
The Americans, I missed this, but in March, the U.S. oil production hit a record?
It absolutely did, right? And again, it's off the backs of multi-years of drilling and developing, and honestly, the investment thesis of investing in U.S. shales and developing those for U.S. it's really changed a lot of the North American market, and U.S. continues to invest in those places.
What do you think? Will OPEC bottle out, as the British say? Do you think they'll say, "Oh, okay, we're just destroying the price with these production increases"?
It's always hard to tell, because I think from the long-term sustainable standpoint, they'd like to see themselves still creating a material part of the market and being able to have that influence. At the same time, they're trying to manage their own revenues and needs as well as a country, right? Or as a group of countries, sorry. So I think we're going to see balance go in, but I think they've seen an opportunity here in the last, like you said, 4 months in a row to take increases. And we haven't seen an exceptionally tough market response to it, meaning that there is enough demand out there for some of these volumes, and we're not seeing massive downward shifts in price like we may have feared.
Switch over to LNG. There are high hopes in Western Canada that this will rescue the Alberta natural gas prices, which has languished for quite a few years.
Yeah, and it has been tough. It's been a tough couple of years on the natural gas market, but especially in the Canadian context, U.S. still continues to be quite strong. But as Canadian companies have ramped up production and ramped up drilling to be able to fill the LNG plant, it has meant that we've had surplus of natural gas. We're competing with the U.S. as they develop their own shales as well. So I think there is a lot of optimism, and we know it's going to be material. When LNG Canada gets up to full, we would have seen the news of the first cargoes leaving the continent. When they get up to full capacity, it's a significant output for the Western Canadian market, and it will change the dynamics, much like the Trans Mountain has changed the oil dynamics as well in Western Canada.
It's interesting. The federal government seems determined to put at least one new oil pipeline in place, export-oriented pipeline, I assume.
Well, I think as we look at the Canadian market and what we've seen over the last 4 or 5 months of understanding tariffs and what that looks like, and I think there's just renewed opportunity and renewed vision to invest in Canadian projects, right? Where it has been difficult to move projects forward, I think there is a little bit more recognition now that there's, we are a rich resource base. We have the opportunity, and maybe having all of our opportunity delivered into the U.S. market isn't the most optimal outcome. And so it renews the conversation of what does new exports look like off the west coast, off the east coast of Canada, and
Yeah.
that's not just in the oil space, but it's also in the minerals that you're talking about as well before this.
Yeah, that's interesting. Quebec put the kibosh on an earlier LNG export plan, but there seems to be moves afoot to get natural gas out from eastern Canada. Of course, we don't have much production in that part of the world.
It certainly is really complicated, right? The infrastructure is not necessarily there, meaning a lot of capital needs to be built. But I think it is just renewed. A lot of those old plans and those old opportunities are still there and can be dusted off. And I think as a country, and if you listen to the current government, they're looking at a lot of projects coast to coast to say, where are the ones that can make the biggest difference for the Canadian economy, for GDP, for jobs, for growth, and get our economy moving. And some of these are coming up to the top again as an opportunity to invest in. And many of those projects were quite advanced in thought. So, they may be a little bit more shovel ready than fresh stuff.